Friends. All right, so last night, don't know if I should have been trading this time of the year, but I jumped on and let's see what we found. Took an L tonight. Look, honestly, it's a terrible mistake to be fair. So it was after my trading time because I'm on holidays. I thought, hey, let's just watch the markets a little bit longer, have the opportunity to stay awake a little longer. So let's just jump in, see what we were looking at last night. So I took a trade pre-market, a nice little trade. It was around. It was around. Nah, it was after 7. Yeah, it must have been through here. Took a nice little trade down, and then yeah. Look, should have just probably called it a night there and then, right? When you're ahead, stay ahead. Had a trade, one trade per day, should have been it. Anyway, so price action wise, now on the 1 hour, let's just cut over here. Excuse all the mess. Maybe I'll just get rid of these lines for now. Let's get rid of the EMAs. Let's just get rid of the EMAs. Bang. So 1 hour, we had this bullish breaker structure up. Keep in mind, we were sort of we're retracing. That's why I took pre-market. That's why I took a bearish trade in pre-market. Thought we might just come down, tag into these lows here. Wasn't sure if we'd do that pre-market, so I just took a little win, right? And then I waited. So I did think we were going to come down in here. After we'd sort of taken these highs, I thought maybe we've taken liquidity on buy side. Maybe we'll come down, retrace into here a little bit if we were going to move up higher, right? So I was just kind of having a look. We had this little area of consolidation. And then we cut to, let's just go back to around about open. And let's have a look what we were working at. Get rid of this fib. Get rid of these. All right. So come down. This was all pre-market action. Okay. We had this big move down. We took this liquidity. That was, I'll try and keep this video nice and short today, guys. Just keep to the facts. So we had this big move down. There was a closure outside of this here. Bear in mind the 4-hour liquidity is down here, right? So what we should have done is taken what the market was giving us at open, right? So if we just cut through to open, we had this 15-minute fair value gap up in here. Let's just fast forward to market open. So we retrace back up into this fair value gap. We respected it. We didn't close above it. We did take out this liquidity. In hindsight, would have been a really nice turtle soup, but I was like patient. I'd already had a trade pre-market, and I thought, let's just wait and see what price action does, right? And I thought my trade will probably be waiting for this 4-hour. So we did that. Took a little bit longer, sort of, to come out of the 4-hour than I had hoped. Should have known that because the 4-hour liquidity, takes some time to develop, right? But anyway, I'll show you what I did. So that would have been nice. Come to here, bang. Look, if you're going to take a trade down, this would have been around here. So we had on the 1 minute, we're already in the 15-minute fair value gap, right? We'd respected it. So these short-term lows here, both of them got broken and created fair value gap. You can probably include that little inefficiency there. Come up, tag. That would have been nice. It's at 9:45 as well. I like to trade after the first 15 minutes. What I should have done in hindsight was probably taking a trade that looked something. I mean, that's already taken liquidity. I probably would have put my stop up there and risked it all for down here. There's all sorts of take profits. Hey, there's all sorts of take profits along the way. And that would have been a nice trade, right? So we already know that come down. Bang. All right, and you could have taken a profit there. You could have, I mean, you would have got stopped at break even, but you still would have made a nice little trade to this first one. That would have been, we're looking at 50 points, 60 points. So good trade. Now, what I did after that was just made a dog's breakfast, to be honest. But look, that's just the way it goes. My goal is always to remain consistent, and at the moment, it's consistently shit, but that's okay. Just not, just didn't take what the market was giving me last night. So anyway, here we come. So we come through here. We remember we're in the 4 hour. Let's just get rid of all this now. We've taken all this liquidity. This up here was that, and you can see this red line here. That's actually London. And my thought was always that it would come back up and attempt to take London. It's a long way, but that's what I was thinking. And at least come back and retrace over these, the opening price. So I was on the 5 minute price action. So we were sort of struggling to break down here, remembering that we were bullish still on the 4 hour. We'd tagged into this fair value gap. I really wanted to see tag, come back up, take this high before doing whatever the market's going to do, right? I mean, we could continue down, but this was a pretty nice move up. We broke through all these sort of fair value gaps. I thought maybe it's at least going to keep coming back up here. That was my thought process in this trade. Bear in mind, we had a pretty big move down on the daily, and we created a fair value gap behind up in here, right? So, but we also, oh no, we had tagged it. Anyway, so 5 minute, 5 minute. So it was around this point where I thought, cool, we'd broken above this, we'd closed above here, this 5 minute fair value gap, and it should have been holding as resistance. So my thinking was we were going to go bullish. What I did, let's refresh where I was. So this right here, I thought we'd come down, we'd come up. I thought this was like our manipulation move back down. If we look at the 5 minute, I figured this was sort of the move back down. Then we had the break up. Problem was, again, this here, this is our short-term high, okay? And yes, we were probably going to go up, but we hadn't broken above here yet. So see this here, this candle closure here, we had not broken above this high. So again, fuck, just didn't wait quite long enough. All right, so I took an entry in here, just under this low here. Let's just call it there. Put my stop down here because I really didn't want to see it come down any further than that. We're talking about 30 points, one contract that's like $600. I was like, look, if it comes back down there, I'm out, right? Chances are it can come all the way back down. I wasn't here for it. And I thought this fair value gap might hold. It kind of closed outside of it on the 1 minute. At any rate, and my take profit was, this was sort of my first target, really. But keep in mind we had Bunk, London, and AM highs. So anyway, bang, got stopped out, right? And then this was more than likely our manipulation move, okay? What was happening on the S&P at that point in time? Let's just have a look. Just for interest sake, because if there was an SMT, then I was probably just a total ball sack. Not quite. All right, and then let's just let it play out. So I got stopped out, and then 5 minute, boom. This now is your breaker structure. Okay. I'd already had my trade. I'd already lost a good amount of money. So we create then fair value gap on the breaker structure right in there. And then what do we do? Where are we? And then what happens? Breaker structure. Come down. We tag the top of that fair value gap. Tag it. That should have been a good enough entry. You could have had a start. You could have had a tight stop there to take a trade. Oh my goodness. Choose the right thing, man. So look, if you want to have a tight stop, you can put it there. I mean, you could probably put it at the top of the resistance. You could just put it at a fixed loss. So, if you're trying to work off a couple $100, that's $200 there. 250, put it down in there somewhere. Top of this resistance. I don't know, something safe for you, okay? This fair value gap was currently holding. And then come down and tag into this fair value gap. Does it hold? This would have been a much better entry, guys. Ah. Well, there you go. All right, so this is what, that's your internal liquidity taken there, okay? Bang, on the 5 minute. That's your internal liquidity. Anywhere in here would have been good for a trade. Right off that fair value gap, probably. See how it comes down, takes this internal liquidity. Then you get a fair value gap. Then it tags into a fair value gap after we've broken structure on the 5 minute. So, I mean, if you still haven't been, we haven't been, like, if we had taken a trade here in this 5 minute fair value gap, we haven't been stopped, right? So you could still be in this trade waiting. Remember, our first target was AM highs. And your really extended take profit would have been London. I can't remember if does it come up and take London. Anyway, and then boom. Take profit taken. And this morning, on review this morning, what I actually noticed was biggest key point is After a 4-hour liquidity here, you can get in early on a 5-minute breaker structure. Um, After a 4-hour liquidity, it's really good to see a 15-minute breaker structure. You have that here, so it's taken this liquidity, but it's actually broken through with a fair value gap. So, you know, I don't know if it comes back in here, but again, that would have been probably pretty nice. Down into here, if we have a look what the S&P was doing, same sort of thing. No SMT per se. Yeah, so that would have been nice. Take it off the order block there. And then we go. What did it do? Did it muck around for a bit? Oh, look at that, guys. Took it all out. Took out London. Took it all out. So that would have been really like, this is lunchtime. It's not the best trade. Look, in the morning, this should have been the best trade. Did I trade well today? No. Did stick to my plan? Did I get sort of bugged out? Yeah. I should have, again, I can't stress you enough, guys. Trying to catch an early move is great. But if you want to keep your losses small, really got to wait for a 5-minute fair value gap. I mean, the problem is a 5-minute break structure and fair value gap. Problem is, here anticipating the breaker structure, you get the risk is it's going to come down and do something to you down here, manipulate down through these wicks. There's a lot of risk in there. There's a lot of movement that can happen before you actually get this. Once it's above this, the probability of it coming back down, if your overall bias in this example is bullish, the probability of coming back down then is much lower once you have this breaker structure, right? The market's telling you that it wants to reach higher. It wants to take out liquidity up higher, okay? And you can see that's exactly what it did. So after I got knocked out on the manipulation, back down before it broke structure in 5 minute. Anyway, so look, I hope that helps, guys. I mean, losses are really, look, guys, losses suck, man. But if you learn something from them and, you know, patience, again, sometimes I get caught up on the 1 minute. I think it's really important to always reference your higher time frames, your 5-minute breaker structures, 15-minute breaker structures, depending on what liquidity you've swept. Okay, sweeping a 15-minute liquidity pool in a 1-minute breaker structure, that's generally okay. That's sort of what I did in pre-market, was 15-minute liquidity pool, 1-minute breaker structure, and then fair value gap. So yeah, look, guys, hope you learned something from that. Again, if there's anything you have to teach me or anything that I can teach you, then let me know. But yeah, not bad. Honestly, last night it was, a lot of FinTwit and all that sort of stuff said it's terrible trading. And look, it's not the best price action, but there is a lot of opportunity for money to be made within here. If you just stick to your discipline, okay? The biggest thing is just sticking to your discipline. This here, this was it, guys. That, and of course the 15-minute up here. But yeah, if you want to chase the early move, I mean, the chances are 15-minute come up, can sweep this, can come back down. So, if you want to catch that move up, you've got to find the 5-minute breaker structures because that happens first, then the 15-minute, then the one, so on and so forth. You know how it goes. So anyway, guys, wish you all the best. Spend time with your loved ones and friends over the weekend, over the Christmas break. Have a good Chrissy. And let's see what 2025 brings us. See you guys. Have fun. Catch you next time.